Good afternoon to everyone and welcome to the fourth quarter earnings call of Mahanagar Gas. We have the management of Mahanagar Gas, Mr. Sanjeev Datta, the Managing Director, Mr. S.M. Ranade, the Chief Financial Officer, and Mr. Rajesh Wagle, the Senior Vice President, Marketing and Projects. I now hand over to the management for their initial comments.
Before we begin, I would like to mention that some of the statements made in today's discussion may be forward-looking in nature, and we believe that expectations contained in the statement are reasonable. However, the nature involves a number of risks and uncertainties that may lead to different results. The risks and uncertainties relating to these statements include, but are not limited to, risks and uncertainties regarding fluctuations in sales volume, fluctuations in foreign exchange, other costs, and our ability to manage growth. I urge you to consider that quarterly numbers are not a reflection of long-term trends or an indication of full-year results. They should not be attempted to be extrapolated or interpolated into full-year numbers. Over to you, sir.
Thank you. Good afternoon to all of you and welcome to Mahanagar Gas Limited earnings conference call for the fourth quarter of financial year 2018-19. I would like to thank all of you who have connected for our earnings call today. The report published by the Intergovernmental Panel on Climate Change in October 2018 has mentioned that about 12 crucial years are left to act in order to save the world from severe climatic conditions. Carbon concentration, which was approximately 392 ppm in 2015, has now reached to 414 ppm. At this rate, it could reach to alarming level of 550 ppm by 2050. No wonder India wishes to increase the share of natural gas in the overall Indian energy basket. As per Vision 2030 report of PNGRB, natural gas demand will go up to 746 MMSCMD, while its supply will go up to 475 MMSCMD in 2029-30. Hence, meeting the growing demand of natural gas in coming years is going to be a big challenge. In India, city gas distribution has a share of about 8% of the total demand of natural gas. Of the total natural gas demand in the CGD sector, CNG contributes to nearly 50%. CNG presently constitutes 4% of total gas consumed. This will grow progressively to around 8% in years to come. With the completion of 10th CGD bidding round, CGD would be available in 228 GAs, comprising of 402 districts spread over 27 states and union territories, covering approximately 70% of India's population and 53% of its geographical area. MGL had applied for 2 GAs, namely Mysuru, Mandya and Chamarajanagar districts and Alappuzha, Kollam and Thiruvananthapuram districts under 10th CGD bidding round. However, we did not succeed in securing any of these GAs. Now coming to MGL's operations, we are rapidly expanding our CGD network in the existing areas of our operation. During the quarter, 38,866 domestic households were added. Today we have more than 1.14 million household customers supplied with piped gas. We have had a net addition of 54 industrial and commercial consumers, and thus, as on date, we have over 3,800 industrial and commercial customers. We are now operating 236 CNG stations, supplying CNG to 692,000 vehicles, and our aggregate of steel and PE pipeline network stands at 5,310 kilometers. With respect to our Raigad GA, we have about 8,900 domestic PNG connections in Uran and adjoining areas. Gas supply to major towns like Pen, Uran and Karjat is being planned through the virtual pipeline network to begin with. In January 2019, the company has received critical permissions from various authorities for laying pipelines in Raigad GA. 3 CNG stations were added during the quarter, and with this, 10 CNG stations are currently operational in Raigad. Presently, CNG sales in Raigad is 27,000 kgs and is expected to go up when some more CNG stations become operational in coming months. During the quarter, we have seen a growth of 7.4% in overall sales volume over the corresponding quarter in the previous year. CNG sales volume grew by 6.9%, domestic sales volume grew by 9.6%, while the industrial and commercial sector sales grew by 8.6%. Overall, the PNG volumes grew by 9%. Gross margin is higher in value terms in the current quarter as compared to corresponding quarter in the previous year because of higher volumes in CNG and PNG and better price realization across all customer categories. EBITDA margin was 29.6% at rupees 214 crore in the current quarter as compared to 30% at rupees 176 crore in the corresponding quarter of the previous year. Net profit after tax grew by 27.4% from rupees 105 crore in the corresponding quarter of previous year to rupees 133 crore in the current quarter. Compared to immediately preceding quarter, current quarter has lesser number of days and as a result, overall sales volume is lower by 0.7%. Due to strike in BEST services, we lost some volumes and CNG volume is lower by 1.1%. Domestic volume is lower by 0.9%. However, the industrial and commercial sector grew by 1.5%. Gross margin grew marginally to 48.9% as compared to 48.8% recorded in the immediately preceding quarter. The company, however, faced a decline in the EBITDA of rupees 7.91 per SCM as compared to rupees 8.77 per SCM in the previous quarter due to lower INC sales realization and higher OPEX on account of CSR, repairs and certain provisions considered. Net profit after tax declined by 10.2% from rupees 148 crore in the preceding quarter to rupees 133 crore in the current quarter. During the year, overall sales volume grew by 9.2% compared to the sales volume of previous year. CNG sales volume also grew by 9.2%. Domestic sales volume grew by 10.7% and industrial and commercial sector grew by 7.8%. Overall, the PNG volumes grew by 9.2%. During the year, EBITDA has increased to rupees 8.22 per SCM as compared to rupees 7.91 per SCM in the previous year. However, gross margin is at 49.6% as compared to 53.7% recorded in the previous year. Net profit after tax grew by 14.3% from rupees 478 crore in the previous year to rupees 546 crore in the current year, enabled by higher volumes and improved EBITDA in rupees per SCM terms. With this, I conclude and would now like to open the floor for questions. Thank you very much.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. The first question is from the line of Probal Sen from Centrum. Please go ahead.
Yeah, hi. Thank you for the opportunity, sir. I had a couple of questions. One, would it be possible to share, as in previous quarters, the industrial and commercial sales volume for this quarter separately?
Yeah, industrial sales volume in MMSCMD terms in this Q4 was 0.233 and commercial was 0.186.
0.186.
This is in Q4.
Sir, would you have the Q3 number also handy?
Yeah, you can take down. Industry was 0.224.
Yeah.
And commercial was 0.180.
0.180. Okay. Sir, the other question I had was with respect to this other expenses. I think Mr. Datta mentioned about the broad reasons. Is it possible to get a bit more specifics given the sharp 19% increase in the other OPEX number on a YOY basis?
Yeah, some more clarity we can give. Nearly additional 6 crores as compared to, you are talking probably with reference to previous quarter, right?
Yeah, whichever, sir. YOY or QOQ, both ways it has actually gone up.
Yeah.
So, whichever data you have would be happy to have, sir.
So, as compared to corresponding quarter, as compared to Q3,
yeah.
reason is because that will be the main concern probably of the people.
Sure.
That has dropped from 148 to 133 odd.
Right.
So, nearly 6 crores is on account of different provisions. Either it could be for inventory-related obsolescence and other things. Then some provisions we are making with reference to pipelines which we lay, which we feel may not be monetized immediately. There are certain provisions due to new accounting standard which has come in place also in AS 109 with respect to expected credit loss and other things. That is approximately 6 crores hit in this quarter Q4. There is some amount of additional OPEX in case of repairs and maintenance activities with the previous quarter. These are the main reasons for higher expenditure between Q4 and Q3.
Sir, is higher level of activity in Raigad by any means a source of the higher OPEX?
Not
I'm
really.
asking from a sustainability perspective in terms of what we should be looking at for FY20 in terms of run rate.
We have already informed earlier as well that generally Q3 and Q4 OPEX tends to be higher than Q1, Q2.
Sure, sir. Sure.
Between Q3 and Q3, some ups and downs are always possible.
Okay.
So the primary reason is obviously Q3 and Q4 will be higher than Q1, Q2.
Right.
If you want to talk about year-on-year expenditure and why that has moved further, primary reason is with reference to as the operations increase, expenditure also tend to rise because substantial amount of expenditure is almost 100% variable.
Sure.
For example, if we talk about power and fuel, which is almost 100% variable linked with CNG volume, the figure has gone up from 105 crores last year to 116 crores. That you will be able to observe in our annual accounts figures also.
Right.
Similarly, another important accounting head will be with reference to CNG dispensing charges. That is also a substantial figure, including, of course, provisions which we make. Another important figure will be with reference to LCV transportation. Wherever, online CNG stations are not there, you must be aware we are required to transport the gas by way of caskets mounted on LCVs.
Right, sir.
That also involves substantial expenditure, and as volumes from so-called Oyster Booster station has increased in this year as compared to previous year, the expenditure has obviously gone up nearly 6 to 7 crores on that account.
Okay.
There are also higher expenditure with reference to consumption of stores and spares, which is mainly with reference to CNG activity.
Right.
Some more details I think you will be able to get it from our annual accounts figures.
Sure, sir. That is very helpful. One last question. Guidance on volumes for next year remains at that 6 to 7% range. And can we get the number of stations that you're looking to add for CNG and household connection target for 20?
Yes, volume we will still maintain at the 6 to 7% range.
Okay.
Business as usual scenario.
Right.
Some potential upsides happen.
Okay. And number of CNG stations to be added, sir? Any guidance on that?
CNG stations we will be targeting in the mid-20s.
Okay, 20s. And household connections, I think the earlier guidance was every year around 0.2 million or so. Does that maintain? Does that remain?
No. I think every year we were adding about 110,000 burning customers.
Okay.
And that number can go up slightly.
So 110 to 120 is what we should work with, right?
Yes, that would be a fair number.
All right, sir. Thank you so much. Thank you so much, sir. That's all. I'll come back if I have more.
Thank you. The next question is from the line of Jinal Fofalia from Turtle Star Portfolio. Please go ahead.
Yeah, good evening, sir, and congrats on decent set of numbers. Well, I had a couple of questions. So my first question is, what's your total number of CNG stations in the regions that you operate as on 31st March 2019? And out of that, how many stations are in Raigad? Hello.
Excuse me, this is the operator. Participants, you are requested to stay connected while we check the management's line.
Yeah.
and gentlemen, thank you for patiently waiting. The line for the management is reconnected. So you may go ahead. We still have Jinal Fofale on the line with us.
Yeah, good evening, sir. Congrats on recent set of numbers. So I have a couple of questions. My first question is, how many CNG stations do we have as on 31st March 2019? And out of this, how many CNG stations are in Raigad?
As of 31st March, we had 236 stations total.
Okay.
And in Raigad, out of these 236, 10 are in Raigad.
Okay. And how much do we plan to add in FY20, that is CNG stations, in the regions that you operate as well as in Raigad?
Put together, it would be about 25 or so. Raigad could be between 5 and 10.
Raigad will be 5 and 10, right? Hello?
Yeah, somewhere between 5 and 10.
Okay. Well, so my second question is, what would be your total CNG consumption for the best buses?
Sorry, can you repeat that? Best buses.
For best buses, what is our total CNG consumption? That's our total volume.
There are about 1,800 buses. On an average, they consume about 55 kgs per day.
55 kg?
Per day, per bus. So it's about 1 lakh kgs per day.
1 lakh kgs per day, and what is the total number of buses that you said?
1,800 CNG buses.
1 lakh kgs per day of this, that 1,800 buses consume, right?
Yes.
Okay. Okay, my next question is, in between, I was aware that we have submitted one catch-up plan after discussing with Maharashtra government. So, what is the progress on that catch-up plan for Raigad?
Number one, it is not submission to Government of Maharashtra. Catch-up plan was submitted to the PNGRB, the regulator. And whatever catch-up plan we had submitted, with reference to that, there are two aspects. One is domestic connections and another pipelines to be laid. In case of domestic connections, we are right on target, whatever catch-up plan we had submitted. Whereas pipelines related, things are progressing.
Okay. So when shall we start getting numbers from this, pipeline and the domestic connections?
Pipeline, right now I don't have ready-made figure, but domestic connections is around 8,900 we completed.
8,900. Okay. Well, so my last question would be on city gas tenders. So in between, we had submitted some city gas tenders. Apart in Maharashtra state, how many cities have we submitted and how many orders have we received so far?
In Maharashtra, we have got the license for the Raigad district in 2015. In the last round of bidding, we put our bids in two areas, none of them are in Maharashtra. One was in Karnataka, other was in Kerala. And we didn't get either of them.
Okay. So, apart from Maharashtra state, do we plan to expand in any other state as well, or are we talking with some other government, of other state government? So, do we have any hopes or expectations that, we get tenders from other states as well?
Well, we are open to opportunities anywhere outside Maharashtra also. And as regards talking to state governments, the licenses in the sector are given out by the central regulator, which is the Petroleum and Natural Gas Regulatory Board. So it's not something given by the state government. So whenever the PNGRB comes out with licensing rounds, we look at whatever area looks attractive and then put in our bids if we feel that it makes sense.
So, sir, as I said, whichever area looks attractive. So far, in how many states have we submitted this tender?
We have totally, I think we would have put in about 7 or 8 bids till now.
7 or 8 bids.
In maybe three or four states.
In 3 or 4 states, right?
Yeah.
And so out of this, how many states have we got the tenders? I mean, have we got the orders?
We have only got one license through the bid round, which is the district of Raigad in Maharashtra.
Okay. And so, could you also...
the operator.
Yeah.
Hopefully, I may be requested to come back in the queue for a follow-up, please.
Yeah, this is my last thing. So, further I don't have to come and follow up.
Okay,
So, hello.
Yeah, go ahead, please.
Yeah, sir, you said 3 to 4 states, right? Could you please name which are those states?
Karnataka, Kerala, Maharashtra, Andhra, Madhya Pradesh also, if I recall. We had also looked at Rajasthan and UP. Goa also. So, yeah, a lot more than 3 or 4.
Maharashtra, MP, UP, and Goa, right?
Yes.
Okay. Okay, sir. Thank you. I'll get back in queue if I have something else. Thank you. Yeah.
The next question is from the line of Vishnu Kumar from Spark Capital. Please go ahead.
Very good evening and thanks for your time, sir. Just wanted to get your thoughts on the gross margin decline quarter on quarter, that is December versus March quarter, whether it's on the pricing or the sourcing side, if you could just elaborate a little on that.
Yeah, you must be aware this oil price levels were down in the Q4 as compared to Q3, and our prices in commercial and industrial customer category are indexed maybe with a lag to the alternate fuels like LSHS, FO or 19 kg LPG cylinders, etc. So if you analyze the revenues for Q4 versus Q3, the price variance for commercial and industrial put together is almost to the extent of rupees 26 crores. Negative.
26, sir?
Negative 26 crores.
Okay. Hello. Hello.
Yes, please.
Yeah. So now that the prices have started moving up, I mean, in general, crude has moved up from the end of the, if I take November, December prices, monthly averages. So will we see better margins again heading in the next couple of months, as in from April, May?
Yes, we should expect, particularly with spot price also being relatively under control right now, we should expect margins improvement in industrial and commercial, barring of course unforeseen problems in exchange rate.
Got it. So what is the typical lag in terms of INC pricing? Is it 1 month or slightly longer?
It's about 1 month. Not longer.
Okay. And in terms of your spot gas pricing, how was it in Q3 and Q4?
In Q3, it was approximately 10-ish, it was almost $10 per MMBTU on an average, whereas it has dropped down definitely, which is less than 9 in Q4 on an average basis.
Okay, so the entire gas, almost you have about a 10% decline. So despite that, we did not get the benefit in INC margins, is it? Or the pricing fell even higher?
The proportionate decrease in sales value or price variance was much more higher, as we talked about earlier. So though benefit of lesser spot was definitely to our account, probably drop in sales realization on proportionate basis was even higher.
Got it, sir. And coming back to the OPEX part, you mentioned that FY19 or overall cost had gone up because of multiple various pointers. Do you see that this kind of a trend will continue into FY20 also? Or if you could just broadly guide us as to how much should we expect the average increase in the other expenses?
These expenses, what we are talking on totality basis, which is a sum of variable expenditure as well as fixed or semi-fixed. Now, there are some at least 4 or 5 heads which are variable in nature. Obviously, they increase directly in proportion of increase in volumes. For example, power and fuel expenditure, almost 100% variable with reference to CNG volumes. There is another 2-3 areas like dispensing charges, which are generally paid as rupees per kg terms. That is also a variable expenditure. So as CNG volumes increase, those expenditure also go up. There are items relating to consumptions of stores and spares, once again something to do with CNG. With capacity being utilized more and more, there is a tendency to go up on those accounts also. So naturally, with substantial portion being variable, the expenditure in totality are bound to go up, not to speak of the general inflation rate in India, which will affect variable as well as fixed or semi-fixed expenses. As a thumb rule, at least around 12-13% total OPEX goes up, but that's a thumb rule, and something similar trend may continue.
Okay, so at least 12 to 13%, at least 4 or 5% over and above the volume growth you're expecting it to go up.
That's the general trend. May differ from year to year, but generally somewhere around that increase is likely.
Also, because you also mentioned that you have to move a lot through LCVs for the distribution to your daughter booster stations. If that proportion continues, will the growth be even faster, in terms of OPEX costs? Because that also seems to be a trend, a rising trend for you.
You are right. However, the sales from daughter booster compressors is much less in proportion as compared to online. So, though theoretically expenditure for LCV transportation may increase, but in the overall impact on entire OPEX will not be substantial on that account.
Got it, sir. And just you opening remark.
Mr. Kumar, may we request?
Okay, I'll come back in the queue. Thank you.
Thank you. The next question is from the line of Tarun Lakhotia from Kotak Securities. Please go ahead.
Yeah, hi. Thanks for taking my question. I have one related to the rising cash and investments on your books. So if I look at, from the time of IPO to now, your dividend payout has reduced from, say, 55% to 36%, while cash balance has now, cash and investments have increased to almost 9.5 billion. So is there any concrete plan to utilize these cash flows, given that we don't have any new license areas beyond Raigarh right now?
Yeah, there are plans. Number one, a slight correction. When we talk about payout ratio, at least internally at company, we take it the ratio inclusive of dividend distribution tax. In that respect, the percentage will be higher than 36% definitely. But that apart, your point is taken as on a comparative basis. Now, next important question is with reference to cash which we have on hand. There is an important strategy exercise the company has undertaken right now. There could be multiple opportunities which we'll be thinking of. That is one of the primary reasons we are still holding on to the cash and not resorting to any excessive or special dividend as such. Of course, you will note that we have already announced a total dividend of 200% this year as compared to last 2 years of 190%. So, some increase in dividend rate anyway we have done vis-a-vis paid-up capital. So, maybe after completing the strategy exercise which we have undertaken, we will take a fresh look at the entire surplus which is available with us. Also, there are some contingent liabilities on the balance sheet which you must have seen at least in the previous year, which are continuing as of now. So, we need to be cognizant of those facts also, and the overall decision will be taken accordingly.
Sir, I understand that you may not be able to share much about the strategy, but if you can give us some, at least a qualitative insight, like is there anything related to some inorganic opportunities which you are evaluating, or, because see, if I look at your total, say, cash profits in a year versus the capex requirement and the dividend payout, there is still an accumulation which you are doing. So maybe if the opportunities are seemingly limited, is there also a thinking that you may do some buyback and, why not buy the stock when it is at somewhat, at least given the kind of cash balance which you have got at the balance sheet right now?
The simple answer is we are open for everything, first of all. Inorganic growth also will be open to, subject to at what price we get those opportunities. That is another. And any other new initiative also, it will be at least somewhat related to our existing business. It's not that altogether different diversification will be undertaken.
And that's, sir, if you can just share a couple of data points, capex for this year, guidance for next year, fiscal 20, and CNG volumes in kgs for this quarter.
Okay, capex this year is around 360 crores. Next year expectation as of now at least could be in the region of at least 450 crores because substantial increase will be there in expenditure relating to Raigad also. And sales kgs in CNG for the current quarter you want or?
Yeah, that's right.
CNG sales in kg, in crores kgs, it is 14 crores.
Okay.
This quarter.
Okay, that's useful. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference call, please limit your questions to 2 per participant. If you have any further questions, you may come back for a follow-up. The next question is from the line of Neeraj Mansinka from Goldman Sachs. Please go ahead.
So just a bookkeeping question. How much is the PMT proportion for the CNG for the quarter and the Q3?
PMT. Okay, we'll just come back to you. What's your any other question you have?
So this question on Q4 last year, Q4 this year, and Q3 this year. So all these 3 data points I wanted. That's all. Thank you.
For current year, at least I can give you right now the figure. PMT is 0.554 MMSCMD on an average for full year 18-19.
Okay, sir.
And for Q3 it was 0.599. Maybe any other quarters or something you want, we can come back to you offline.
No, that's all. Thank you. But you're telling that the average of the year was lower than the Q3. Is that the right way to do it? Or that number, that 0.554 you gave was for Q4?
0.554 is for entire financial year, 18-19.
Okay.
Yeah.
Okay, all right, sir. Thank you.
Thank you. The next question is from the line of Gagan Dixit from Elara Capital. Please go ahead.
Yes, sir. Sir, my question is regarding that now there's many state governments like Delhi, Kerala are very active in financial support to electric vehicles. Your thought on its potential risk?
Excuse me, this is the operator. Mr. Gagan, Mr. Dixit, your voice is not audible. Your voice is breaking.
Yeah, am I audible now?
Yes, thank you.
Yeah, so my question is regarding that many state governments are pushing for the EV infrastructure like Delhi and Kerala. So what's your thought on the potential, any risk from the EV you see, in the next 3 to 5 years, especially on the best buses, something related to that? Any thought on that, sir?
Well, in the short term, we don't see too much of a risk. Medium term, 4-5 years period, there could be some penetration, but our belief is that it would be at the expense of diesel, most probably, and not at the expense of CNG. And as regards buses running on EVs, on a trial basis, the MMRD and BST have run about 20-odd electric buses in Mumbai, in and around BKC. That experiment has been a commercial failure for them because they're not getting enough ticketing revenue to sustain the operation of those buses. So there are a lot of challenges. Of course, the biggest one being availability of charging infrastructure, etc. So given all these points, we don't see it as a significant risk, at least in the short term.
Yeah. And sir, my last question is regarding that, is this PNGRB is considering some network tariff of your network in Mumbai, something like that?
I understand the PNGRB is in the process of formulating and notifying the tariff regulations for CGD. Currently, the regulations are not there. Previous regulations were struck down by the Supreme Court in the IGL versus PNGRB case. The PNGRB is yet to re-notify tariff regulations in line with the Act. So once that happens, then there will be a period of data filing, etc., tariff determination, which may take a few months.
Yeah. So, sir, PNGRB, any thoughts, sir? How much time it might take something for this, their regulations, any initial regulations should come? Any idea about it, sir?
No, that's totally in the PNGRB's hands, so we really can't comment on how soon or how slow that will come.
Okay, sir. That's from my end, sir. Thanks, sir.
Thank you. The next question is from the line of Nitin Tiwari from Antique Stock. Please go ahead.
Hello. Hi, sir. Good evening. Thanks for taking my question. So it's related to basically marketing and infrastructure exclusivity for you in the current GAs. So I suppose the marketing exclusivity has ended. So when is the infrastructure exclusivity getting over? And then I'll follow up after you have answered that.
The GA1, which is Mumbai, completes its 25 years in May 2020. So it's about a year from now.
Okay.
GA2 will be April 2030. GA3 will be April 2040.
Okay, so thanks a lot. Sir, my second question, which is a follow-up to that, is that given GA1, the infra exclusivity is also ending in May 2020 and marketing one is already over. So do you see a possibility of any other competitor coming into the market, or is regulator of the view of introducing more competition in the same GA, or maybe OMCs could consider putting up CNG stations? So if you can give some color on that, and then secondly, if suppose that happens, and if at all additional infrastructure doesn't come in, your infra itself is used, so then what would be the basis of basically charging the tariff if a third party uses your infra for carrying gas?
Well, on your last question first, the principles of calculation of the tariff are yet to be notified by the PNGRB. But if you draw an analogy, the previous regulations, which were quashed by the Supreme Court, offered a 14% post-tax return on your regulated assets.
Right.
So the tariff would be set at that level. So now we don't know whether the regulator will use the same approach or a different approach, or 14% will go down to 12% or go to 15%. That's up to the regulator.
So in today's day and time, suppose if the new regulation is not notified, but there is a player who wants to enter, so then the charging of tariff would be in your hands, right? You will be able to determine the tariff and ask the third party to pay tariff on those So would it be you will be basically determining the tariff, or somebody else a regulator would be determining? How would it be determined?
Tariff is determined by the regulator.
Right. No, in today's scenario, when there is no notified regulation, suppose if a third party wants to enter, then who sets the tariff and what that tariff would be?
Well, in such a case, and in case MGL decides to entertain such a marketeer, it will most probably be a mutually agreed negotiated tariff.
Right, which will be somewhere around 14% post-tax ROC regulation that we used to have, right?
Not necessarily, because right now, since the PNGRB has not formally declared us as an open common carrier, the marketeer doesn't have a right to use our infrastructure.
Right. So in terms of common carrier also, so what's the regulation like? If there is capacity in the pipeline, then only you have to offer common carrier capacity, or you have to keep that capacity aside irrespective of what volume you are carrying?
As far as I recall, the regulations require entities to maintain some 25% extra capacity to accommodate third-party commodity sellers.
Right. So in the way we discuss the scenario now, do you foresee, or do you have are you sensing any activity in the market which tells you that there could be an opportunity for a third party to enter, not only in our GA but in GAs which are reaching maturity in terms of exclusivity?
In theory, there could always be people interested in marketing. And many CGDs have already completed their 3 years, 5 years of exclusivity. We are not aware of any entity formally approaching, the CGD for third-party access. And
right,
we have, as per the regulations, notified all our entry, exit points, etc., capacity, etc., on our website as per regulatory requirements.
Right, sir.
But again, basic situation is we are not yet declared a common carrier, so which is a requirement in the Act.
Right, sir.
So only after that, then, such a scenario can evolve.
Right. Great, so that's really helpful. The second question is purely bookkeeping. You mentioned that you have 3,800 commercial and industrial consumers. So if you can give a breakup between industrial and commercial of that 3,800.
Well, large majority of them are commercial. Industrial would be only about 80 or so.
80.
Yeah.
Okay. Thank you, sir. Thank you so much.
Thank you. The next question is from the line of Rohit Ahuja from Bank of Baroda Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. So wanted some clarity on the industrial and commercial volumes in terms of pricing. We saw this quarter margins declining, while simultaneously we also seen spot LNG prices also coming off sharply. So how does this translate, in for this quarter? I mean, currently running quarter of Q1 FY20 onwards. And do you see a recovery in margins, or it's going to be difficult to predict right now?
Yeah, we expect improvement in margins with respect to industrial and commercial in the current quarter.
So you said there is a pricing is based on a mix of FO and commercial LPG?
Right? Yeah, it is predominantly LSHS for industry.
Right.
And for commercial or restaurant categories, it is with reference to 19 kg cylinders.
I see. So in this current quarter, like in the running month of April and May, we've seen spot LNG prices declining far ahead of the movement in the opposite direction of the movement in LPG and LSHS. So that should be beneficial for us?
Yes, you are right. That will be added advantage.
Right, so great. So moving to the next question. So on the CNG side, we've seen, you mentioned a lot of reasons for the other expenses to move up, but you also mentioned about the cascades, that CNG being transported to cascades for the new stations. Would this be primarily in Raigad? Like any new station you add like 5 to 10, you have 10 already and you're planning to add 5 to 10. Do we see cascades being used for like 1 to 2 years, or till when do we expect that?
Yes, CNG sales is predominantly cascade based, or almost entire is cascade based, no doubt about that. But at the same time, there are some pockets in GA1 and GA2 areas as well. Due to certain reasons, we do have daughter booster stations there, where transportation of gas is through LCVs.
So in a nutshell, can we say what you mentioned earlier also, I think that the other expense component will continue to rise in the range of 8 to 10% per year?
It will be a bit higher than that, maybe 12-13%.
Right. All right, sir. Thanks a lot. That was helpful.
Thank you. The next question is from the line of Kashyap Javeri from Emkay Global. Please go ahead.
Yeah, sir, I joined the call a bit late, but if you could help me with, the realizations in industrial and commercial, segment, how much was the, sort of pressure in terms of realizations, if you could quantify?
You're talking of the sales realization?
Versus Q3 of this year.
In case of commercial category, the sales realization was approximately 36 rupees or almost 37 rupees, whereas in case of Q3, that is earlier quarter, it was almost 44 rupees per SCM.
And as in the previous question, when you highlighted that, we should see improvement in these realizations in the current quarter, which is Q1, would it go back to the same level, or it would sort of somewhere in the middle?
I think premature to say whether it will go back to that level, but definitely it's going to be higher, no doubt about that.
Sure, sir, sure. That's it from my side, sir. Thank you very much.
Thank you. The next question is from the line of Vasim Shah from Capgrow Capital. Please go ahead.
Yeah, hi. I just wanted to know some of the highlights from the recent auction that was conducted by PNGRB, the 10th auction that was held 2 months back. So if you could just share some highlights of why was it that you guys didn't win any GAs, and were you guys being too aggressive or conservative, or was it that the other bidders were being too aggressive?
I suspect, we believe rather that the other bidders were extremely aggressive in a lot of GAs. And our experience of 24 years in this industry leads us to believe that, creating this infrastructure, it doesn't happen overnight. You can't, you need to be a bit realistic. So we were slightly conservative. I'll say we are more realistic in our bidding numbers, but then many entities bid extremely aggressively, and they are the ones who got a lot of licenses.
Okay, yeah, that was it from my side. Thank you.
Thank you. The next question is from the line of Manikanta Gare from Axis Capital. Please go ahead.
Thanks for taking my question, sir. So may I check with you, what is
excuse
the
me,
current...
this is the operator. Mr. Gare, so your voice is not very audible.
How is it now?
A little better, thank you.
Hi, sir. So may I check with you, what is the current pipeline utilization across the infra?
Well, in a city gas distribution network, it's a very difficult question to answer. Because, it's not like a linear transmission pipeline where you can say pipeline capacity, is 30 MMS CMD and I'm flowing 20 MMS CMD. Our city gate stations are designed to have at least a 50% redundancy level. And and we have more than 5,000 kilometers of pipelines which are in a mesh form. They're in a grid form, they're not linear. So different capacities will actually be there corresponding to different pairs of entry and exit points in the network.
Got it, sir. So once PNGRB announces that you are a common carrier, all of this mesh of pipelines, all of that would be announced as a common carrier, right?
Yes, if you look at our website, we have defined something called entry points and exit points as per which are required as per regulations. So each pair of entry and exit point will have a certain capacity, basically.
Okay, basically where I'm heading to, sir, so there would be some set of pipelines in this mesh which would be working at full utilization levels. So in that scenario, if a third party comes, how would it work? Like the third party can lay another pipeline in that area, or how does it work?
Not really, because infrastructure exclusivity is ours, so it's only the authorized entity who can lay pipelines. But typically this kind of scenario doesn't happen. What happens is way much before it reaches saturation, we do something called reinforcement of our network. We can either lay parallel lines or we can loop the network to increase its capacity. So there are various ways in which you can increase your operating pressure a little bit to give you more flow. So there are technical ways and means in which you can augment the capacity.
Okay, but I'm talking about a situation in which your infrastructure exclusively also gets over. In that case...
Well, the regulations are probably, they have a provision of a rollover of infrastructure exclusivity in blocks of 10 years. Of course, that's if you're not in contravention of any of your regulatory obligations, and we definitely are not in default of any of our obligations. So we expect to get a rollover in GA1.
Sure, sir. One last question from my side. So we have seen one experienced player tying up with OEMs and utility companies in Delhi. So are you also thinking anything of that sort in Mumbai? I agree, you already mentioned that EVs for us is a 4 to 5 year thingy. But would you be thinking about anything of this sort, or it's still some time away for you?
If it makes any commercial prudence, then yes.
But are there any discussions or any thoughts going on in the boardroom with respect to this, or we may ask about that?
No, nothing concrete at this stage.
Okay, so thank you so much.
Thank you. The next question is from the line of Abhijit Vora from Sharekhan. Please go ahead.
Yes, sir. I just missed upon the infrastructure exclusivity. It will be ending for GA1 in April 2020, right?
Yeah, May 2020.
May 2, and for GA2?
In 2030.
Okay. And we are, the marketing exclusivity have already ended for GA1.
There is a yes and no in it. As per the regulations notified, the exclusivity regulations which are notified by the PNGRB, They gave us in GA1 3 years of exclusivity, GA2 5 years of exclusivity. But that period is over, I think 8 years back.
Okay.
But those regulations also are currently sub judice, so we really can't say. They are under challenge in the Delhi High Court right now.
Okay.
So, and our understanding is for your marketing exclusivity also to get over, as per the Act, there is a formal requirement of declaring an entity as a common carrier by a formal notification and by following a particular process.
Okay.
Which is yet to happen.
Okay. And I just missed on one more point, like the sales realization was 37 rupees per SCM versus 44 rupees per SCM for the entire industrial and commercial customers, right?
It was only for commercial category.
Okay, only for commercial category. Okay. Okay, thank you, sir.
Thank you. The next question is from the line of Reena Shah from Ashika Stock Broking. Please go ahead.
Hello. Hello?
Yes, please.
Yeah, sir, I wanted to know that, yes, you have guided the volume growth of 6 to 7% going forward. I wanted a bifurcation on CNG, PNG, domestic or industrial, if you can give something.
The CNG is at that 6 to 7% itself.
Okay.
Domestic and commercial would be a couple of percentage points higher.
Okay.
Industry would be 1 or 2 percentage points lower.
Okay. Okay. And sir, any clue on how you are looking at CNG conversions growth, like any view on that?
CNG conversions have been relatively steady. We're hitting about numbers between 6 and 7,000 every month.
Okay.
And big chunk of that, about 4,000 odd, happens from the auto rickshaw segment. 2,000 odd happens in the four-wheeler segment, which is both private cars and aggregators and taxis, etc.
Okay.
Very little of commercial vehicles or goods vehicles convert in the city of Mumbai.
Okay. So trucks and all these doesn't come especially in Mumbai?
They come, but their numbers are very small.
Okay. Okay. That is it. Thank you, sir.
Thank you. The next question is from the line of Rajesh Agarwal from Money or Advisors. Please go ahead.
So my question on the CNG conversion is said already. My only one question is for the new geography area, whether it will be through pipeline or it will be cascades.
Are you asking about Raigad?
Raigad, yes.
Raigad, initially it is through cascades.
Okay.
In about a year or two, we will have our city gate stations and some steel trunk pipelines operational.
Okay.
In which case, some of the load will then be taken over by pipelines. The residual load will remain on cascades till such time our pipelines reach there.
By what time, sir?
Well, Raigad is a very large area. It's almost 7,000 square kilometers. So there may be some places which are, it is financially prudent to serve them by cascades rather than pipelines. Because if you want to lay a 50-kilometer pipeline to cater to 2 or 3 CNG stations, it will be better to operate those by cascades.
What can be the potential in the Raigad market for the CNG vehicles and the industrial?
Our current estimates are about between 0.6 and 0.7 MMSCMD.
Okay. And the new geographical which we have bidded in, that would be cascade or it will be through pipeline?
We didn't get any. No, 9th and 10th round, we didn't get any licenses.
Okay. Thank you, sir.
Thank you. The next question is from the line of Vidyadhar Ginde from ICICI Securities. Please go ahead.
Yeah, thank you. So a couple of questions I wanted to ask. One was in terms of this competition, new competition emerging. One of the reasons why new competition is unlikely to emerge, I understand, is because especially for CNG and domestic PNG, you have access to gas at the first priority for APM gas. That only you are entitled to, isn't it? Any potential new entrant would not get access to that gas. Is that not the biggest entry barrier for a new player?
Yes, that is a very big entry barrier because as the government policy stands today, it is only the authorized entity who is having access to domestically produced gas, and that too only for sale within its own GA.
And given the shortage, this APM gas actually is probably going to more likely to decline rather than rise. This policy is unlikely to change, I presume.
policy has stood the test of time. Even the previous government followed the same policy, the current government followed the same policy. And if you look at the volume growth rate in this segment, currently about 60 odd MMSCMD of domestically produced gas is sold by GAIL in the country, and the CNG and domestic household segments put together is not more than 13 or 14 MMSCMD. And these are retail segments in which sales volumes ramp up pretty gradually. Each domestic household you connect takes half a cubic meter. Each vehicle, rickshaw or taxi you convert will take 5 kgs. So it's not like starting a large industrial or a power plant where there can be step jumps in volumes. So the ramp up will happen gradually, and even if all the 9-10 round cities come up, we believe that there is enough residual APM gas available, because since we are on the top priority, even if domestic production does not increase, we will continue to get the gas at the expense of the segments which are in the lower priority.
So are you basically, because that was actually going to be my next question, that your rough mix of PMT and the gas for which the price is linked to these prices in US, UK, Canada and Russia, that price which changes every 6 months, that mix appears to be around 78-22. You don't see that increasing significantly away from the cheaper price gas in a hurry? Given that, as you said, that is 60 MMSCMD of gas available, even if it falls, you guys are your first priority and just 13 to 14 MMSCMD. But as these more CGD GAs start operating, do you see that becoming a risk? Because now then the demand for that gas will keep rising.
You see, even if all the awarded GAs start growing at double-digit growth rates or whatever, you need to consider the fact that the base is zero. So it will take quite some time, many years, for it to reach any significant level to impact the volume availability for CGD. The second thing about the mix, the other thing which we need to keep in mind is probably the PMT contracts expire sometime in 2019 or so. So after that, we don't know what exactly the decision of the government will be. And will it be zero PMT and everything will be then called APM, in which case there might be a price advantage for us. But that is something which we just have to wait and see.
But which at least initially will have to be passed on to the consumer either way.
Yes, so that lever is always there. We have substantial headroom in our pricing. Even with if the domestic price goes up, or even if there is, you have to accommodate a small percentage of LNG into this mix, we don't foresee too much of an issue.
So to summarize, can we say that at least in the near future, this competition as well as things stand, as well as significant increase in gas cost doesn't appear to be a risk?
Yes, that's our current belief.
Yeah, okay. Thanks a lot. Things stand for. Are we going to take more questions or should we?
So we don't have anybody in the queue.
Okay, great. So thanks a lot to the management for answering all these questions. And thank you to everyone. So we'll end the call here. I think if management wants to have summarize before we end the call.
Yeah, I think this financial year 2018-19 was an excellent financial year. The sales volume growth was 9% plus. At the same time, there was some improvement in the overall EBITDA margin rupees per SCM. So we are hoping to continue to do better next year. And thank you very much for joining, all of you.
Thanks.
Thank you very much, sir.